Welcome back, everybody, to another episode of Multifamily Report. I'm your host, Travis Watts, and this series is dedicated to you, the multifamily investor. We talk about market news, industry insights, updates on the economy, and what's happening in the world of multifamily real estate. Timely episode here today as Yardi Matrix just released their latest November report. And they do a lot of reporting nationwide on a lot of different asset classes, one of which happens to be multifamily apartments. Had a lot of great information. There's a lot of information out there on the internet that you may see that seems scary or whatnot. And so I wanted to break that down in terms of the facts and what's really happening. So I'm going to pull some segments from the large report that they issue, and you can always find this online for free yourself. But if you want to save a little time and not have to read through the whole thing, I'm just going to simply extract some key points and things to think about as we wrap up the year here in 2022. In this report, Yardi Matrix points out that facing a variety of economic headwinds and deteriorating demand, multifamily rents finally turned negative in November of 2022. The asking price of rents fell about $9 per month to $17.19, while the year-over-year growth dropped to 7%, the lowest level in 17 months. In comparison to single-family homes, it's generally been following a very similar trend, and the rents have dropped $5 in November of 2022, which now has the national average at $2,091 for renting a single-family home. The year-over-year increase fell by 80 basis points to 5.9%. Now, something notable here is that this trend was not unexpected. Over the past 2 years, we've seen rent growth at exceptionally high rates. In fact, 22% rent increase over the last 2 years from January of 2021 to October of 2022. At some point, things have to stabilize and normalize and sometimes even soften up a bit when you get such excess rent growth. Another interesting takeaway here is that the decline was heavily concentrated on the luxury and the high-end lifestyle segment. So these are renters who are usually renting by choice, have the best amenities, have the highest rents. And so that decline came at 0.8%, while the renter by necessity, these are renters who have to rent because they otherwise cannot afford to buy a home, only fell by 0.2% in November 2022. The absorption rates on multifamily apartments, which is effectively how many renters are absorbing or renting these multifamily apartments, has largely remained positive throughout the entire year of 2022, but is in fact below the levels of 2021, which was fueled by very strong job growth and household savings coming out of the pandemic. Another interesting point that actually comes from a survey by the National Association for Business Economics found that the majority of economists place about a 50% chance of a recession occurring in 2023. National lease renewals are hovering around 63.8%, at least from the data in September of 2022. That has continued to slowly drop from the peak that we saw in the fourth quarter of 2021, when lease renewals were at 68.2%. And one reason that the lease renewals are in a slight decline is because, generally speaking, rents are still going up in most markets. Again, 6.4% year to date. And rents are a lagging indicator. What that means is if somebody were to purchase a multifamily apartment complex today, they're buying a property that has existing renters already in place that are locked into leases that they may have signed 1 to 2 years ago. And so the name of the game in most cases is when those leases expire, you lift the rents up to whatever the market level is at the time. As these renters see the increase in prices, sometimes they will move. They will instead look to buying a home. They will look at alternative options. But in reality, when we think about the single family housing sector, mortgage rates have effectively doubled over the last 12 months, making it even less affordable for new home buyers. And again, that's why when we went over the stats that I shared a few minutes ago, with the decline in rents over the lifestyle, the luxury, and high end, they had the largest decline at 0.8% as compared to the renter by necessity that really has no other choice than to rent, and they only had the decline of 0.2%. As a reminder, Ashcroft Capital invests in the B class sector, meaning we're purchasing older properties with high occupancy and high collections. We are implementing a value add business plan, which means that we're renovating the clubhouse, the amenities, the units to be able to justify rent increases. So as we look at the tail end of 2022, if you have questions about multifamily investing this year or moving into 2023, feel free to reach out to Travis at ashcroftcapital.com. Be happy to answer any of your questions. If you want to take a deeper dive on the content shared in this video today, you can visit yardimatrix.com for more information. Thank you so much for tuning in to another episode of Multifamily Report. Have a great week, and we'll see you in the next episode.